Okay, good morning, everybody, and welcome to the Gulf Intelligence Daily Energy Markets Forum, where we take stock of where the market has opened in Asia, which today is prices coming off a little bit. Nothing too dramatic, but nonetheless, a little bit softer start. Let's kick off with Peter McGuire, CEO of XM Australia. Peter, welcome back to the table. We also had your favorite person, Mr. Powell, the Fed chairman, speaking yesterday. Again, sort of, warning everybody not to be concerned about inflation. Your thoughts on the market open this morning?
Oh, I was going to cook a cake, Sean, because all of the inputs that go into the cake are getting cheaper, they tell me, or are they getting more expensive? So, yes, obviously the commodity cycle, and that's where what I've got my lens certainly focused on as far as commodities and being bid up strongly over the last matter of probably 3 to 6 months. That's globally. So as far as the inflation story, yeah, I buy it all the time. They've got their hands on the wheel for a different reason completely, and that is stimulus and get over the COVID. Try and put that to bed by April, May or June, and then grow the economy for the rest of the year, Sean.
And clearly the Fed, I mean, everybody's still looking at the old economic textbooks of unemployment and inflation, and the Fed is actually trying to educate us all in basic new economics. We all have to learn that inflation and unemployment no longer matters.
Well, that's right. We'll have one economy for the world. We'll have one currency, and everything will be looked after, Sean. We'll get a couple of dollars every week, and hopefully we won't have to worry about too much else. So hopefully that doesn't happen.
You will not only be able to wear shorts below the desk, but you can have your T-shirt on above it, and maybe you'll get your free paycheck from the Fed. They'll even send it to Australians. Who knows? We've had baked in the cake for some time in this market the idea that the US was going to give us another bazooka stimulus. It's signed off. It's going to be signed off by the House this week, House of Representatives, which is one half of the Congress. This 1.9 trillion, and all in all, it's expected to literally be, checks in the post by mid-March. My question is ultimately, has the market moved on from this? We're beyond that's baked in the cake, or will that deliver further upward momentum for all financial assets, but oil included?
I think, Sean, there's probably about 80% baked in. I think you'll get a little bit of an upsweep from it once it's signed, sealed, and delivered, and then the check's in the mail. But the other side, of course, we've been very heavily sold off as far as Asia today in Asian equities. And I'm just looking here, we've got China down the best part of 3% and Hong Kong down 3.3%. So I also say that we've already achieved incredible growth over the last 8 or 9 months with equities. Copper's been bid up at 9,200 a metric ton and well up from the 6s and 7,000s, and have a look at where crude oil is. So maybe we're at that point of an inflection, Sean, that there's a little bit more steam there, but not a lot. I don't know whether we go around and throw the hat around, after Easter and maybe May or June, with the unemployment still shaky in the States, whether we need another round of stimulus. So I think that's the only real reason keeping it up at the moment.
Right. We've seen the beginning of grumblings, if you like. India has been quite vocal about the elevated crude price. They're reaching records every day with diesel and petrol. We've seen in Brazil, Petrobras have their CEO removed because Petrobras was raising diesel prices with the rise in the market prices, and he ended up getting fired because, of course, that's not good policy for politicians when people have to pay more at the pump. Yes. What are your thoughts about that momentum from the consumer side, that this rise in commodity prices across the board at this moment when the economies are trying to rehabilitate? Can the two coexist?
Well, Sean, that's the issue that we face as far as, and we made that in the first point, as far as inflation. All of those inputs, it's more expensive. Are wages going up? Is there growth there? So how many people are prepared in 2021 to say to their boss or their employer, I've done a really good job in 2020 and I'd like a pay rise of 15% because commodities have all gone up and everything costs more money. So I'm not sure whether there's going to be that flow on there. So I think we're getting squeezed a little bit. And as you pointed out, with crude prices back above 60, that really puts a handbrake on the wallet and the purse as far as how much they've got extra left over after they fill the car or the motorbike or the truck for their daily consumption as far as energy.
Peter, looking towards the rest of the week, we're halfway through. What do you think guides us going forward? The Fed announcement yesterday, or the Fed presentation, was a bit of more of the same, one might say. Powell continuing this same narrative that they're not going to do anything. We're sitting on our hands, keep the party going. What will you be watching through the rest of the week that could be directing the markets?
Sean, building on that, British, Australian and Japanese data for the week. We've got UK employment data. I made a note of that for December. So we'll take that on board. That strengthened the pound. I'm looking as far as the US dollar, 90.04. That big build up as far as energy prices, whether there's going to be a washout if equities tail off over the next 2 days, building on what happened in China today and across certain markets across Asia. And don't take your mind off, South America was pretty washed out yesterday also.
I mean, are these dips to buy? Are they turns of correction?
Sean, I think more authenticity to the market to really get a closer understanding of where we are. We've had an enormous rally to the upside. Some of these markets have been extraordinary over the last 4 or 5 months, and certainly the commodity cycle has since the end of October, and really
up
some of them
60%
January.
Since the low.
Exactly.
Commodities up 60%.
And so I think that it's a point of time from a trading perspective. Remember, our traders are after days or possibly a week, or maybe a month is an eternity to hold an instrument. So they look for opportunity, and at the present time, it's very, very toppy, which allows opportunity. But I think at the present, they've really got to be very focused on the big picture, all of the fundamentals. Look at your technicals, what's happening as far as seasonality, and I'm making reference to it again. China off 3% today worries me a little bit. I just go, aha. Same with Hong Kong. So I want to see where that builds over the next matter of 2 days leading up until Friday.
Are we still do you think, are we still on the track then of the narrative that says first half is sort of recovery vaccine, second half is takeoff, that paradigm still exists?
Well,
or is it buy the rumor, sell the news?
Yeah, well, they're building on that, Sean. I think the cheap money story is the number one that's going to keep us onward and upward to some form. And that Jerome Powell saying that, Fed chair, that there's no thoughts on anyone's radar as far as lifting rates, though bond yields are up. So I just want to see over this first quarter where the lay of the land is and where the sea is. And I want to see whether we get a full tide or it's or tsunami.
Well, that's a wrap up for today. And thank you, Peter, Andrea, and Victor. We will have an interview now posted with the Vice Chairman of Tellurian about all things that happened in Texas last week, which, as we know, was a big ice storm, but not so big that it should have knocked out the energy infrastructure of the world's 9th largest economy. And so there's some good, useful insights as to what happened there and what is now going to happen next. And you can see the headline, as is all things in America, what happens next are the lawsuits. And that certainly will have a big impact on the direction of what happens with the energy structure in Texas.